This is our Forex blog for Friday, March 11th, 2011. And like what we do most days, we really want to find currencies that are having some real-time strength. And if it's in the direction of the weekly and monthly trend, preferably, you want to trade those against currencies that are weak. You can see the pound daily, weekly, and monthly trends down. The Australian is also daily, weekly, monthly trend down. So they're the two weakest currencies without a doubt. The yen is also pretty weak longer term, but is experiencing mostly strength today and last night. So when you see some weakness here in the pound coming into about 230, you want to trade that against one of the stronger ones. Today the yen was stronger than the dollar, but you could have basically looked for buys in the pound dollar. I'm sorry, not buys, sells in the weak pound versus strong dollar or pound yen. So coming up to 2 o'clock, you can see that the price is underneath the hourly, daily, weekly, and monthly trends down. It had rallied up to the previous week's low and wasn't able to get above it. When it broke down right here, you might have went short, and the next trade on the pullback right up to the hourly, it wasn't able to get above it. There was not that much upwards momentum, and then you go short again, and it pretty much just fell like a rock to the next Fibonacci profit target level that I created last night. It's also a little bit beyond the 1.618 fib target of the first move. Notice on this pullback, not only did it find the resistance area, the hourly moving average, but it also pulled back the 0.618 Fibonacci area. It wasn't able to get above it, and then as it was coming down, there wasn't incredible real-time momentum, but for the most part, other than this one up bar right here, there was, most of the pound pairs are falling and dollar pairs are getting stronger. And anytime you see a spike in weakness, usually you can wait for somewhat of a decent pullback, go short again, and when it came back down and double bottom right there, the pound was a week ago a pretty strong currency trending up, and it's had 3, 4, 5 days down relatively in a row, finding this double bottom right here with less weakness than before. It's down significantly from its highs. Pretty high probability trade, and you hold to the hourly moving average. And when you get into any kind of riskier or counter trend trade, watch our real-time FX momentum tool, and you can see when you see spikes of green like that, pretty much pound pairs are going up and dollar pairs are getting down. In fact, you saw that even right here on this bar right here. So they give you a little bit of an early warning, kind of a safe, clear sign to look for a counter trend trade right there. And as it was going up, you can see the real-time momentum. The spikes were to the upside. Pretty much a no-brainer. Pound yen also very likely to go down, even though the yen is not as strong as the dollar is right now. This price is underneath the hourly. It rallied up to the hourly, went above it, and when it came back down again right here, good place to go short. You can see off the charts momentum to the downside, and anytime you have 1 or 2 hour sideways range in the direction of the trend, you can look for sells here. And there's a lot of support underneath it. You would expect this to be your profit target down here around 05. You're expecting to make about 50 pips on the trade, and just there was such yen strength, it just collapsed down. I mean, this was actually a combination of extreme pound weakness and yen strength. And when it gets this far underneath the lower band, it's the first sign of it stalling. You want to exit your trade. That was a double home run. You made 100 pips in 20 minutes. Doesn't normally happen. Another one that was weak last night, coming into midnight, was the Australian, and the dollar wasn't really weak before the day started, but the yen was. So the Australian yen was a pretty decent one to look for sells coming into today, and again when it broke underneath these multi-hour lows right here in the hourly moving average, great place to go short. You can see incredible weakness right here, and it kind of had a little mini double top right here. If it had gone up to the hourly, it would have been a little bit of a safer trade. Anytime you see a double top in the direction of the real-time trend, the daily, weekly, monthly trends down, we had off the charts weakness right there. Aggressive traders would have sold the double top and then watched it as it went down. The previous swing low is obviously usually the